This is one of those weeks where traders think they're making the right decision, but they're actually getting trapped. The market just rallied hard in the last couple of days, but if you don't understand why it moved, you're going to misread everything this week. So in this video, I'm going to break down exactly what's driving the market right now and the key levels and scenarios you need to watch so you don't get caught on wrong side of the market. And if you stay till the end of the video, you will have a clear game plan for trading SPY, S&P 500 ETF, QQQ, NASDAQ, oil, gold, and all major tech names going into this week. If you're new here, my name is Shahryar. I run Meta Trading Club. I've been trading for years, and what I focus on in this channel is not on random strategies. It's building a structured way to understand the market so you can actually execute consistently. On this channel, I break down the market, the stock market, options trading, stock trading in a real practical way. There's no hype, no signal, just helping you understand what's actually happening and how to approach trading properly. So let's start with what actually happened last week. Market pushed higher across the board, and NASDAQ up over 4% and S&P 500 up more than 3%. But this wasn't a clean breakout. This was a relief rally. We had oversold condition, short covering, and most importantly, sentiment shifting around the Iran situation. So yes, the price moved up, but the quality of the move actually matters. And right now, this is not a confirmed strength yet. Right now, the market is not being driven by a clean technical structure. It's being driven by headlines, geopolitics, oil, and expectations around the inflation. So we saw oil spike aggressively during the week, then pulled back, and every time oil moved, the market actually reacted. That tells you something very important. This is a reactive market, not a stable one, which means you're going to see fake moves, traps, and reversals probably all over the place. So if there's one chart you need to watch this week, it's oil. You can check out WTI because oil is directly tied to inflation, and inflation is what the market is focused on right now. If oil pushes higher, expect pressure on the equities and the stock market. If oil stabilizes or drops, which for now it's actually pushing higher, well, it's not happening right now, but if it stabilizes or drops, that gives room for the market to continue going higher. So before even looking at S&P 500 or NASDAQ, you need to watch oil. Now let's talk about tech, because this is what held the market up. We saw strong rebound in names like NVIDIA, Meta, Google, and overall semiconductor names in general. And that's important because right now tech is carrying the market. If tech holds, we can see possible continuation in this bullish move in the overall market. If tech fails at resistance, this whole move can fade very quickly. And at the same time, not everything is strong. Tesla sold off after weak delivery numbers, and this is something a lot of traders miss. This is not a broad, healthy rally. It's mainly selective, and in selective markets, you have to be way more precise. Now, let's talk about the technicals. Starting from SPY, S&P 500 ETF, we had this rally in the last week. The price bounced back up from this 633 all the way up till this 656. But right now, we're still holding below the 200 SMA, which is around 662 level. So that 662-ish zone is still a major resistance zone on SPY. And it's not really that far from last week's high, which was right around this 658-ish level. So this whole area would be the main resistance level for the next week. And on the demand side, we have 642 all the way up till 640-ish area as the main demand zone that we have on SPY. Now, if the price does push higher above 662, that probably needs either a ceasefire or some major news on the Iran and US and Israel conflict. If that happens, probably the market can push up higher, and we need that kind of catalyst for the market to push back up higher. If that doesn't happen, then we'll probably reject these areas and push lower. Now, on the move to the downside, we have this 640 till 642 as the first main demand zone. If we do hit these areas, there is a possibility of bounce, but if we do break, we can push all the way lower till 630 zone on SPY. On Qs, we did push up higher with the whole market, as I explained. So basically, we are rejecting this 587-ish level on QQQ. We're still far from the 200 SMA on the daily chart, which is around 596. But as you saw in the last week, we rejected this 587 level last week on Wednesday, and we might reject this area for the week ahead as well. But if we do break out of this area, the next major level would be the same 595, 596, which is the 200 SMA on QQQ. To the downside, we have 573 as the main demand zone. If we hit these zones, there is a high chance of bounce, but if we do break down with a negative catalyst, the price can push lower down till 569 and even retest this 560 level again. Now let's go over some individual tickers. TSLA, Tesla, the first one, which it had weak delivery numbers last week. As a result, we're seeing a rejection of this 363-ish zone on TSLA. We are rejecting right below this area, which is basically the resistance right now, and we're holding right below this 362. So if the price holds below 362 till 367-ish resistance area, we can have Tesla on watch for a possible short and a retest of 355. Now, if we do break out of this area, get above this 367, 368, we have room to retest 375, and then ultimately the next major resistance would be 383 all the way up till 385 on TSLA. NVIDIA actually bounced really well. As I explained, the whole semiconductor bounced really strong last week, but we're still below the 200 SMA, right around this 180 zone. We did bounce, but we are still right below this resistance. So if we do retest this 180-ish zone, there's a high chance of rejection there, and if that happens, we'll probably reverse with the whole market. That would be one scenario, and we can retest 174 and then around 170. If we do break out of this 179, 180-ish zone, then we have this 184.5 as the next resistance area on NVIDIA. Google did bounce really well. Google didn't even touch 200 SMA. So Google is holding really strongly and really well so far. So if Google actually breaks out of last week's high, which is right around this 300, 301, that would be a great opportunity to trade it to the upside all the way up till 306, which is going to be the next resistance area. Now, if we do reject this zone and push lower below this 290, 291-ish level, we have room to go down till 288, and then after that we have room to go all the way down till 282 as the next levels. Amazon is consolidating for so long around this range, so I'm not really interested in touching Amazon unless it gets below this 198 or above 213 to 215 ish level. AMD actually was really strong last week. semiconductors were really strong. It bounced really well right above the 200 SMA. So I'm watching AMD for a possible retest of this 221 level. If that happens, we have room to retest this 225, 6, 7-ish resistance area. Okay, keep that in mind. We had this massive run, so a possible consolidation might happen, right? And at the same time, if the market actually reverses or sells off, AMD might reverse here right below this 221. And if that happens, probably the target could be right around this 209, 208-ish level. If it gets back down below 209, I'm not really a fan of trading it because it was really choppy right around this 195 all the way up till 209, 210. So this zone was relatively choppy on AMD unless we do see a clear strength by bid or ask. Now let's talk about Meta. Meta actually did break below this 580-ish level and then pushed all the way lower, hit this 530 level, and then now retested the same 580-ish zone. This is a very strong retest and looks really good for a possible rejection of this area and breaking below this trend line. And this is forming a sort of a triangle right below this 580 level. So I am interested in watching Meta below this 562. If that happens, we have room to go down till 546, 545, and then even retest 526.7 as well. Now, if we do break out of this area, which we were not able to do it in last Wednesday, that would be a possibility if we do break out of this area. The next major resistance is right around this 600. This is a massive zone, and we need to get out of that area as well. So be aware of this resistance area. So this kind of analysis exactly is what we focus on inside Meta Trading Club. We're breaking the whole market down live every single day in the pre-market, during the session, and in our live webinars. So instead of trying to figure it out yourself alone, you can actually see how we approach it in the real time and join our community. If you're serious about trading this year and you need a structure and not random entries, there is a 7-day free trial where you can come in, join us inside the community, watch the sessions, trade with us live, and see exactly how this works. The link is in the description. Now, this week is very important from data perspective as well. We have ISM services PMI FOMC meeting minutes on Wednesday and Monday. On Tuesday, we don't have any red folder economic event. On Thursday, we have core PCE and final GDP. And Friday, we have CPI. CPI is a big one because inflation is what the market is reacting to right now. So expect some volatility, especially around these releases and these times. On the earnings side, we don't have much going on. The only name that I'm focusing on would be Delta, DAL, on Wednesday, which its earning is before the market open. That might give us some opportunities depending on the earning. I would watch it above this 68.5, 69-ish level if it gaps up to the upside, or if it breaks below this 62 level, I might watch it to the downside. That would be the only name that I might focus on for earning play. So how do we prepare for this week? Very simple. We don't predict, we prepare. If oil stabilizes or drops, tech holds the strength and the market breaks resistance, then we'll look for confirmations for possible bullish setups. If oil spikes again, inflation comes in hot, and tech fails, then this rally can fade quickly and we can have some interesting short setups in the market. So the goal is not to guess the direction, the goal is to react to confirmations that we get from the price action. Well, at the end of the day, this is not the market where you guess. This is the market where you wait, confirm, and execute properly. Most traders are going to get chopped out in this week because they're reaching to price instead of understanding what's driving the price and what's causing the price to move higher or lower. So stay patient, stay structured, and let the market come to you. And if this breakdown helped you, make sure you like the video, subscribe to the channel so you don't miss the next weekly prep, because these are the conditions where having the right perspective actually matters. See you in the next video.